It's a great question. So since the last time we were on, and the way that it's going to be going forward is once the market crashed, you had a 12% 1 week crash in February. Once it did that, history is very, very clear on how you form a bottom. Like I do believe that we're pretty close, if not already, having made, quote unquote, a low. But the only way that you know that you've made the panic low, there's three phases in a crash. There's a panic, there's a relief rally, and then there's the demoralization test. So we're probably toward the very tail end of the panic phase of it. And you only know that, Scott, once you've had a multi-week rally. I mean, I would have gotten killed as a trader because you've been so oversold for so long, and there's been so many extremes. What we've been trying to do since that 12% drop is say, don't try to buy the panic, because history is very clear. The vast majority of the times, you will test or even marginally break that panic low. 1987 is a great example, Scott. You made the panic low in October. You recouped 30% of those losses. 30%, not a 30% gain. You recouped 30% of that initial drop and crash from peak in 1987 crash. But then in December, early December, you went back down and tested and even marginally broke that low. Same thing in 2011. And you can even go back into 1929 and see the same thing. So our input to investors is, number one, please consult a financial advisor that knows your personal situation versus listening to people like me and David and Jack and other people tell you what to do, number one. Number two, if you have a plan going in, and our plan is, again, you're going to get we should be able to get a multi-week rally from here. And rather than quote unquote try to play that, our expectation is you go back to test the low, and that, all things being equal, with the fiscal and monetary stimulus that's historic, that's where we're going to want to take an offensive approach. And we've been saying this since February.
Understood.